Hey guys, welcome to the Chapter 6 recap, type of health insurance policies. And we are on the home stretch here, guys. We are almost done with a lot of our studying. Chapter 6, everything from there starts to move pretty quick as we dive into the health insurance policies. I'm going to go ahead and share our screen. Again, guys, read through this information 2 or 3 times because it is a ton of information. Health insurance can be kind of confusing if you don't already have a background in it. But hopefully this recap will really help you guys. Chapter 6 recap, types of health insurance policies, medical expense insurance, basic hospital, medical, and surgical policies. The basic hospital expense coverage is going to cover your hospital room and board, any type of miscellaneous expenses such as labs, x-rays, different medicines that you had to take on or the insured had to take on when they're confined to a hospital. So this is your basic medical expense coverage, anything that really is kind of very basic, very encompassing of the type of expenses that you would see and really going to be kind of the base for a lot of health insurance plans. Miscellaneous health insurance, miscellaneous hospital expenses. This is going to pay for any other miscellaneous expenses associated with the hospital stay, expressed as either multiple room board charge or, maybe they're just going to give you a flat dollar amount. Basic medical expense coverage provides coverage for non-surgical physician services. Also can be purchased to cover emergency room accident benefits, maternity benefits, mental or nervous disorders, hospice care, home health, or outpatient care, and nurses' expenses. So make sure that you understand the basic hospital expense coverage is really, if you're confined to a hospital, really the basic coverage there as far as covering hospital room and board, the miscellaneous expenses, labs, x-rays, or medicines while you're in that hospital stay. Miscellaneous hospital stay is kind of going to cover everything outside of, or at least a good portion of the things outside of that basic hospital expense coverage. And understand that the basic medical expense coverage is going to provide you coverage for, non-surgical physician services. It can also be purchased to cover emergency accident benefits, maybe maternity, mental nervous disorders, hospice care, home health care, outpatient care, and nurses' expenses. So that's typically things outside of the hospital. Basic surgical expense coverage is going to cover the cost of surgeons' services, whether whether the surgery is performed in or out of the hospital. So read it word for word and really understand the definitions. They kind of are a little bit self-explanatory. Really just understand if it says hospital, they're talking about if you're confined to the hospital for some kind of emergency. Basic medical expense is going to be everything outside the hospital. And then obviously surgical expense coverage is going to be based off the surgeon services and the costs associated with it. Major medical policies. They offer a range of different types of coverage, lifetime benefit per person limit under one policy. So this is going to be comprehensive coverage for hospital expenses, catastrophic medical expense protection, and benefits for prolonged injury or illness. There's 2 types of major medical policies that you really need to know, which is supplemental major medical policies and comprehensive major medical policies. So obviously comprehensive is going to, encompass a lot more. Supplemental is going to help whatever that comprehensive medical policy does not cover. HMOs, health maintenance organizations. This is going to be, your preventative care. You're going to have a limited service area. You're going to have a limited choice of providers. You're going to have co-payments. It's going to be a prepaid basis, and you're going to have a PCP. You're going to have a primary care physician that kind of serves as your gatekeeper. And if you need to go see someone else that's, more specialized in a certain type of field, whether it's orthopedic, heart, whatever it may be, you're going to use the referral system. And your PCP's referral is going to be required so that they use somebody inside that organization, that HMO that you're paying for. PPOs, preferred provider organizations, is a group of physicians and hospitals that contract to provide medical care services at a reduced fee. Members can use any physician that they choose from, but are encouraged to use the approved physicians who they've previously agreed upon of fees. So HMO, you're going to be a little bit more limited on the people that you can choose, the different providers, and you're going to really require referrals, through your PCP. The PPO, you have a little bit more flexibility in the different physicians and different people that you can see for your health insurance and your health needs. Point of service plans, POS, is kind of a combination of both. So you're going to have a combination of your HMO and your PPO plan. And for your employees, the employees are not locked into one plan. They're allowed to choose depending on the need for medical services. So that's more geared towards employees and that kind of aspect. And then flexible spending account, FSA, funded by salary reduction and employer contributions. So typically that might come, out of your salary a little bit, but you're going to have some employer contributions. Employees deposit pre-tax funds into the account. During the year, the employee is reimbursed from this account for eligible healthcare and dependent care expenses. FSA benefits are subject to an annual maximum or a use it or lose it rule. So, if you use whatever money's been put into there by the end of the year, that's great, but it does not, roll over to the next year. So you really want to use it or lose it if you have an FSA. And obviously you get employer contributions, and then employees will deposit pre-tax funds into that account. High deductible health plans, HDHPs, health savings accounts, health reimbursement accounts. So the high deductible health plans, HDHPs, are used in coordinations with MSAs, HSAs, and HRAs. The features are higher annual deductibles and more out-of-pocket limits than the traditional health plans, but that means lower premiums. So think of health insurance as a lever, right? The higher premiums you have, the lower deductibles, lower out-of-pocket that you're going to pay, but the lower premiums that you pay, typically you're going to have higher annual deductibles and higher out-of-pocket limits that you're going to have to pay for your medical expenses and your health insurance expenses. So think of it as a lever. Obviously, high deductible plans, you're going to have lower premiums. So understand that. HSAs, health savings accounts. Individuals covered by a high deductible health plan can make a tax deductible contribution to an HSA and use it to pay out for out-of-pocket medical expenses. So understand that is a tax deductible contribution to the HSA, and you use it to pay out for, out-of-pocket medical expenses. It's obviously going to be, part of that HDHP. So you are going to have, pretty high deductibles, but you can make contributions to that health savings account. That's going to be tax deductible. Health reimbursement account, HRAs. Employers set aside funds to reimburse employees for qualified medical expenses. Employers receive tax advantages and can deduct this cost as a business expense. So employers are going to set aside funds to reimburse, their employees for any kind of qualified medical expenses, and the employees are going to receive the tax benefits and the tax advantages, and they can deduct this as a business expense. Again, guys, that's why a lot of employers do, benefits, whether it's retirement plans, group life, or group health. They want the tax deductions, they want the tax benefits, and pass that down to the employees. So really understand what HDHPs are: high deductible, lower premium. Understand that lever aspect, and just know that that is associated with HSAs and HRAs. Just note that the health savings account, you can build up that health savings account. You're going to get tax deduction contributions to it. And then the health reimbursement accounts, you're just going to be reimbursed by your employer by some money that they set aside. Disability income insurance. It's just what it sounds like. It's going to replace lost income in the event of a disability. Presumptive disability. This specifies a condition that you qualify as the insured for full disability benefits. So, of course, whenever you get a disability plan, they're going to give you a list of things that qualify. So just understand that the presumptive disability specifies a condition that you qualify for full disability benefits. Recurrent disability. Specifies period of time during the recurrence of an injury or illness will be considered a continuation of a prior disability. Recurrent, reoccurring disability. Maybe you're having issues, you got hurt on the job or whatever it is, and you continuously have issues with that lingering injury, illness, whatever it may be. This is going to specify the period of time and the reoccurrence of that injury or illness that they're going to say, hey, this is just a continuation of that prior disability. Elimination period. Waiting period that lasts from the onset of disability until the benefit payment starts. So let's say, hey, you get injured and you have a 90-day elimination period. You have to go 90 days after you file that disability for your disability income to start coming in. So elimination period, it's kind of a scary term, elimination, like what does that mean? But really that's the time period from when you get injured or when you get disabled, and the time period of when you start to receive that disability income payment. So understanding elimination period, that's a very important one. Probationary period after the policy starts, which the benefits won't be paid for illness or illness-related disabilities. So they're going to say, hey, this policy has to be in effect for this long, for this type of period before the benefits will be paid for the illness and related disabilities. Just to reiterate, period after the policy starts during which benefits won't be paid for illness-related disabilities. Benefit period, exactly what it sounds like. Length of time monthly disability benefits payments last. So, hey, whenever you create a disability, insurance policy, it's going to say, hey, we're going to pay out this disability for however set period of time. So understand the benefit period if you do sign somebody up for disability income insurance. Benefit limitations. Maximum benefits an insurer is willing to accept for an individual risk. Based on percentage of insured's past earnings, they're going to look at all the money that you made in the past and say, hey, if your salary or your annual income from your job is $100,000, they're going to, provide some max benefits. Typically, it's a percentage of 50, 60, 65%. That they're willing to pay for, based off your past earnings, that they're willing to pay for disability income. Just depends on kind of the insurance carrier, depends on the risk and that they're willing to take, and also the type of job as well. Social Insurance Supplement, SIS, or Social Security riders supplement or replace benefits payable under Social Security disability. So this is just, a supplement to your Social Security and the disability aspects that are tied to your Social Security. So anytime you hear social insurance, typically they're talking about Social Security. So when you hear social insurance supplement, just know that that's supplementing and kind of a rider to your Social Security disability aspect and disability income insurance. Business overhead expense reimburses small business owners for overhead expenses incurred while the business owner is totally disabled. So you can get this policy where if the business owner is disabled, he's not able to provide his businesses, maybe it's loss of income, loss of revenue, you're not able to provide the services that you're typically able to provide as a business owner. You can get business overhead expense and they'll reimburse business owners for the necessary overhead expenses that were incurred during this disability for that business owner. Business disability buyout policy specifies who will purchase a business partner's interest in case of a disability. This is going to specify, it's a big reason why some people do key man as well, but that obviously, requires a passing. But let's just say somebody gets really hurt, really bad, and they're not able to do their part of the job. You're going to have, the business disability buyout policy where typically, the business partner is going to buy out the other because they're unable to fill, their roles in that company. So that's business disability buyout policy. Key person disability covers the potential loss of business income and expense of hiring and training a replacement for that key person. Business owns the contract, pays the premium, and is the beneficiary. So this is really to protect a business if maybe, you have a board of directors or you have a CEO and the company can't really run without them. You're going to have this key person disability if maybe that CEO gets disabled, it's going to cover all the potential loss of business income and pay for the expenses of hiring and training, a new CEO for that job and to fill that position. So those kind of overlap a little bit, especially, the business overhead expense policy and the key person disability policy. So understand the differences there, and just really kind of define and read the definition and understand the differences associated with it. So accidental death and dismemberment. The coverage only pays for accidental losses. It is considered a pure form of accident insurance. Principal sum paid for accidental death. Capital sum percentage of the principal will pay for dismemberment. So this is a true accident. Nothing that was malicious, nothing that was purposeful, but a true accident, death, and dismemberment. If you lose a limb or whatever it may be, they'll pay out some money there. So important to know the accidental death and dismemberment, that it has to be a pure form of accident. Long-term care, different types of policies and the policy aspects from long-term care, available for individual policies, group policies, or riders to life insurance policies. And that's where you really will see the large benefit of, the living benefits on a life insurance policy, is that it's kind of an attached rider. A lot of times it won't be extra cost. So, if you do a permanent life insurance policy, you can have that rider on for long-term care. I've kind of mentioned this in several other chapter recaps. But the coverage for individuals who require, living assistance at home or in a nursing home facility, that's what long-term care is. You must provide at least 12 months of they must provide at least 12 months of consecutive coverage in a setting other than an acute care unit of a hospital. So, home health, or you have a stay-at-home nurse, they're going to provide that coverage for you. That's the long-term care, because you have, it's typically going to go, the average long-term care need is typically 24 months or 2 years. So it's very important that you kind of have that long-term care situation taken care of. That's really going to drain your retirement accounts. It's really going to drain all your assets to pay for that, because it is very expensive to have a nursing home or a stay-at-home nurse. Guaranteed renewable, but insurers may increase premiums. More often than not, guys, they are going to increase premiums on you. And that's why long-term care has kind of become forgotten about or diminished as a standalone long-term care policy. That's why you see it on so much life insurance policies, because you get the 2-for-1 aspect with the life insurance and the long-term care. And because long-term care, if you don't use it, you kind of lose it, and they're going to raise premiums. And it in the longevity of things, it's a lot better to try to find a life insurance policy that has that long-term care rider. Levels of care. Skilled care. Again, guys, that's going to be, your daily nursing or rehabilitative care provided by a medical personnel. Intermediate care, occasional nursing or rehabilitative care provided for stable conditions that require daily medical assistance or less frequent basis than a skilled care. Obviously, skilled care, they're going to be a lot more hands-on. Intermediate's going to be a little bit in between. You're still a little bit self-sustaining for, a long-term care situation, but you still need some kind of daily medical assistance one way or another. Custodial care for a person's activities of daily living provided in an institutional setting or in a patient's home. Custodial care, that's when you're going to be in a nursing home. That's when you're going to have a nurse there that's going to be 9 to 5 to take care of you, because you can't do what is called the ADLs, activities of daily living. Typically 2 of 6 ADLs qualify. I mentioned them earlier. A lot of times those first ones are going to be toileting or bathing by yourself, definitely driving a car, things like that. Home health care provided by registered nurses, licensed practical nurses, licensed vocational nurses, or community-based organizations like hospice in one's home. So again, the home health care is exactly what it sounds like. You're having somebody take care of you from 9 to 5. They're really having to help you around the house. They're going to be registered nurses. They're going to have their licenses and all that good stuff, or a community-based organization. Home convalescent care provided by a long-term care facility a home health care agency or a hospital in the insured's home under a planned program established by an attending physician. So, long-term care facility or home health care agency or a hospital in the insured's home. That's a little bit more of a serious type of long-term care aspect. Residential care provided while the insured resides in a retirement community. You're going to be in that retirement community. It's going to be based off the residency, probably going to be, in some kind of nursing home or some kind of, community, retirement community where they have these kinds of long-term care availability, at least in the community basis. Adult daycare. It's just what it sounds like, guys. But it provides for functionally impaired adults on less than 24-hour basis. So you don't have 24 hours around the clock. You just kind of go during the day. Think of it literally as a daycare for, adults or really senior citizens where, they go for most of the day, they do activities and they get help and whatnot, but they don't need the 24-hour around the clock care. Respite care provides relief to family, caregiver, adult daycare centers may also provide this type of relief. So this is, going to have some kind of funds, to relieve the family caregiver, whoever it may be, and kind of pay them for their services if it is a family member, and kind of treat them as maybe that in-home nurse or whatever it may be. So long-term care, guys, there's so many different aspects of it. But just make sure that, if you do a long-term care policy, that it's encompassing of all these things. Typically, the life insurance aspect is going to cover a lot of these long-term care factors and the different levels of care. Group health insurance. So the basics, the group is formed for a purpose other than obtaining group health insurance. Typically, it's going to be employer sponsored, but you can also have association sponsors. Again, the employer is going to really want to do this, but sometimes you can be an association. Maybe it's like the Lions Club or, the parents association at the school or whatever. You can get some kind of association that also, leverage each other's health to get that group health rating. So that there's a benefit there, but more often than not, it's going to be an employer sponsored plan. Underwriting. Every eligible member of the group must be covered regardless of physical condition, age, sex, or occupation. Cost varies by ratio of males to females and average age of group. Evidence of insurability is generally not required. Again, guys, this kind of goes back to the group life insurance concept of law of large numbers. The insurance companies are going to say, hey, maybe there's a few people who have bad health, but overall, based off of, their age and their gender, we're going to think and hope that most of them are healthy. So we'll take the risk on a few if it means that we get everybody else based off the law of large numbers. So the group aspect, you're typically not going to have to, provide evidence of insurability, and that's the real benefit there. COBRA, qualifying events, which is a voluntary termination of employment. Termination of employment for reasons other than gross misconduct, meaning, you didn't get fired, you didn't do anything inappropriate or inappropriate. There was no bad reason why, you got fired or quit. For example, company downsized, they had to let some people go. That's when you would qualify for COBRA. So really, it's an employment status change from full-time to part-time or not working. The length of coverage is typically 18 months after that qualifying event, after that termination, that voluntary termination of employment, or if you got terminated, because of downsizing or whatever it may be. Or 36 months for dependents after events such as death of employee, divorce, or legal separation. So your dependents will still be covered for 36 months. Limited benefit plans. The different types of limited benefit plans. Accident, coverage for disability, medical care, death and dismemberment resulting from an accident. Kind of goes, back and forth and overlaps with that accident type of care. So just understand that accident, coverage for disability, medical care, death, dismemberment from an accident. Dread disease policy. A variety of benefits from a specific disease, such as cancer policy or heart disease policy. Guys, you can have a standalone cancer policy. You can, have a standalone heart disease policy for that specific situation. Again, a lot of that stuff, it will be covered through a life insurance policy with the appropriate riders too. So, or even your health insurance. Critical illness pays a lump sum to the insured upon diagnosis and survival of critical illness. They're going to have a list of illnesses that qualify for that critical illness, and you can have that type of benefit plan as well. Employer-sponsored plan. Employers provided group coverage. Employees must meet the service requirements and work full-time. To get the employer-sponsored plan, you have to work full-time to get that, and it's going to be provided as a group coverage, kind of that group health insurance aspect. Hospital indemnity provides a specific amount on a daily, weekly, or monthly basis where the insured is confined to a hospital. So, if you're confined to a hospital and you have, an indemnity plan, you're going to pay out of pocket for a lot of that stuff. But what they're going to do is they're going to totally reimburse you, make you indemnity, or give you indemnity and make you whole. Dental plans covers the treatment, care, and prevention of dental disease and injury to, the insured's teeth. Dental plans and dental insurance is pretty self-explanatory. So really it covers the treatment, care, and prevention of dental disease. Short-term medical, temporary coverage for people in transition, kind of that gap coverage if you need something short-term, if you're going through different employers who have group benefits and maybe you're past the COBRA or whatever it may be, or maybe you didn't qualify for the COBRA aspect. Vision and hearing plans, type of group health insurance plans that cover eye examination and eyeglasses, hearing aids on a limited basis. So understand that, guys. What I will say is life insurance makes up the majority of this exam. Health insurance, there's less than you would think. And look at all this information. This is just different types of health insurance policies. They don't expect you to be a master or a wizard at health insurance, but you really do need to know the basics. You need to understand the concept of lower premiums mean higher deductibles and higher out of pocket. Higher premiums mean lower deductibles, lower out of pocket costs. You need to kind of understand, the basic medical expense coverages, whether it's basic medical expense coverage, basic hospital expense coverage. You really want to know really the difference between an HMO and a PPO. Again, HMO, you're going to be very limited. You're going to have a limited service area, limited choice of providers, and you're going to have to use your PCP as a referral. A PPO, you're going to have a larger and greater flexibility of providers and physicians that you can see. Not providers, but rather physicians and doctors that you can see. And then understand, the small differences or the varying differences between an FSA account, the HSA, and the HRA. And then obviously when it comes to disability, just understand that really that's disability income. They're going to have a benefit period. They're going to have limitations, and you're going to have an elimination period. Really know what elimination period is. That was on my exam. I would anticipate it being on your exam. Again, know the business stuff. Accidental death and dismemberment. Know that's pure accident, not self-induced or not purposeful. And know the long-term care, guys. I don't think you'll have to know really the specific differences of level of care, but you really want to know what long-term care is. Typically, that's going to be home health, nursing home, pretty much long-term care in a nursing facility for senior citizens. So, and again, group insurance, they're looking at the group, law of large numbers. You're not really going to have to provide any kind of insurability because it's a big group. Know the COBRA, know that it's a voluntary termination. And really, guys, that's kind of the base of that you'll have to know. Really just become very familiar with the foundation, some of the main differences, and really the basics of the health insurance types of policies. Because like I said, most of the exam, life insurance is going to make up, probably 40% of the entire exam. health insurance is going to make up about 32% of the exam. So make sure that you really become a master of life insurance. It's a little bit easier information to digest, but you really want to know the basics of health insurance to give yourself the best opportunity to pass this exam. I know this was a lot of information, and I hope you guys were able to stick with it. Again, you might want to read through this information as far as the sections 2 or 3 times so that you really have a good understanding for it, and maybe want to watch this chapter 6 recap video a time or two, so it really helps you guys resonate with some of this information. That's the end of chapter 6. Thank you guys for listening.